Good afternoon, Scott Redler T3 Live. Welcome to today's recap. So I got to make this quick because I want to trade Apple earnings myself. With that being said, we came in today. Futures were up a little bit. We were talking about what type of day we would have after last week's, downdraft, so to speak. 3% off the highs, or 3.1 in the S&P, 4% in the Dow. Definitely was pretty quick and pretty fast. So coming in today, we were talking if we could see 176.50 to 177.5 quickly, it could be a buyable spot for an oversold bounce, but the question is what type of bounce. And the bounce was a little lethargic, feeble, if you want to say. At this point, lots of these charts look the same. Some acted a little bit better than others when it traded below and then back above, and there was more money to be made in individual names. You actually could have made it both ways. We talked, about Google traded through Friday's low, and it went down like $30 and sliced through the 50-day, came back up. Whatever. Let me just get through some charts and show you what I'm talking about. If you look here at the SPX, all right, here is the two different trends that we were talking about. Here's your intermediate trend where almost touched. Here's that accelerated trend that broke last week. If you did reduce risk around the 21-day moving average, which is what a lot of us like to do when, these accelerated trends break, you're able to perhaps buy a little bit in the hole here. And then with that being said, you couldn't really add. And that's going to be what's interesting right now in this market is, can you buy into the hole, into an area and then have to, sell some strength or cover into the hole and then short some strength. At this point, in a pretty harsh move lower, here is your next point of reference. We'll see if this could get taken out to then perhaps retest this broken area or not. We'll see what happens tomorrow. Now, if tomorrow we open lower, you could buy versus 1772. Here's that 100-day that'll be moving up. Here is the support. You go to the SPY, which is something that I focused on today, and it came into the zone. I unfortunately had to leave for a family scenario and put some orders in from 177.5 to 176.5, and went as low as 177.12. Got some, and then it just didn't close well. Holding support, maybe he needs a few days to build. Some are pointing out this pattern, which makes a little sense, perhaps. If this wants to be a bigger head and shoulders pattern, here's your left shoulder, here's your head. So if that's the case, we could see a right shoulder. So still tactically, you could see a bounce for this to build. And then if that was the case, then all of a sudden, with more time, panning itself out, then this becomes a neckline. And then if this does come into fruition, it breaks that, then all those bears out there calling for, or even traders, there are some people who would like to see the 200-day. If that was the case, then perhaps this would be the pattern that could build for that. Not saying, sometimes it just goes straight through and doesn't give you the bounce. I'm hoping that we get a little tradable bounce to maybe even short for that type of move, but we'll see. Not much else to really look at. XLF tried to bounce off this trend line. It too was pretty lethargic. Goldman was weak all day. It came off the lows. It came off the 100-day, but didn't show much power. So if you're in a little bit, just being a little bit, it's definitely the jury's out and no one's rushing to buy there. Let's see, RTHs, everything off the lows a little bit. XLI, off the lows a little bit. And with that being said, I don't want to get through all the sectors. Nothing really stood out, except for that it definitely felt the buyers were not in a rush to get in there, that you could have had some paper cuts, and then finally, if you had the perfect level, which you had to be really patient for, then you had a better bounce. But if you added to it, you've ruined your average cost. So it wasn't by any means easy. Real quickly, you got Google sliced this trend line that we were talking about. Here was your upper spot that it first went through. There was your 8-day. Here was your 21-day. It even went through the 50-day before bouncing a little bit off it. That was a little scary trade for a while. Now we have another point of reference. Facebook also. This was the breakout failure. Here it tagged the 50-day, went through it a little bit, came back off. So just a lot of sloppy, messy type of scenarios. Go to the casinos just to show you one. What did WYNN do? Same thing. Look at this trend. If you rode the trend, hopefully you got out when the trend ended. And that happened right around there. And now, can it find support? Can you buy in the hole? Yeah, but it's still above this key support and not quite a red dog reversal. Kind of bounce into these moving averages perhaps, but it's just not the easiest type of trade. Lastly, because Apple's coming out, I want to get out there. This was one of those older charts. Here is this wedge type pattern that's building. I did take a small amount of calls just in case they halted, and it's really good. I'm going to try and trade it after hours. Here's your levels. If you hear I think the earnings is supposed to be $14 or so, maybe here 14.5, 15. First move could be up above 560. Then your next is up above here. This is resistance 1, resistance 2. If you're trading it for after hours momentum, if it opens up above this, only stay with it if it holds above this 560, 562. If the guidance isn't too muted, which I'll talk about on my radio, and they come in line with the guidance and they don't bring down the margins, then perhaps we get that breakout move. I think some money would love to hide in here. I hate the fact that it's been talked about to death, so everyone's going to look for something negative, even in what could be a positive report. But overall, here it is, 560. Here's 574. If you're trading it after hours, these are your levels. If they happen to be just in line and not a really strong report and it comes lower, here's your 530, and there's your 520, 522. So resistance 1, resistance 2, support 1, support 2. And then come listen to us on the VTF. Overall, not a very decisive day because we also have a big week in front of us. Didn't see that many earnings come out yet. We have a lot of them between Apple after the close, Facebook. You have the Fed still Tuesday, Wednesday. And we're not sure. Everyone out there is saying we're going to see at least 10%. At this point, it's showing its character that you don't have to be in a rush. Be patient, be specific, have your prices in front of you, take trades, and then at some point we can go back to portfolio approach versus tactical. We'll see. At least we have some new points of reference today. Have a great night. See you at the morning call with Brittany.